You can make 1000 rupees profit from trading using only support and resistance. In real market, price doesn't react levels randomly. It reacts based on what 90% do and the operators the 10% do. So what does the operators know that the retailers don't? In this video, I won't teach you the basic textbook lines. I will teach you the advanced support and resistance, how institutions see the levels, how to confirm them and how to use them for trading. So without wasting any time, let's get to the point. So there are 4 types of support and resistance in the market. Number 1 is previous swing high and low. Number 2 is PSY levels. Number 3 is day high and day low. And number 4 is previous day closing. So let's come to previous swing high and low. So whenever market goes up like this area are called previous swing low and it works like support. And whenever market goes like this area calls previous swing high and it works like resistance. Number 2 is PSY levels. It means psychological levels. So 500 and 1000 number levels are called PSY levels. Like 20,000 is a psychological level. And after 20,000 the next psychological levels are to 20,000 and 500. After 20,500 the next psychological level is 21,000. So basically the 500 and 1000 level numbers are called psychological levels. Let's assume 41,000. Yes, 41,000 is a psychological level. So these levels works as support and resistance. Number 3 is previous day low and day high. Number 3 is day low and day high. So here's what I mean by this. Markets goes like this and goes here, then come down, hit like this and there's gone. So this area is day high and this area is day low. So these areas are also like support and resistance. So market if goes down, market can go down, and came this level, market can go up because it works like support and resistance. So number 4 is previous day closing. So previous day closing is also work like support and resistance. So if market moves like this and closes here and next day market opens at this level, so this level can be work as support and resistance. This level can be work at support level, and if market closes like this and then opens gap down, so this area also called as resistance level. So these are the 4 types of support and resistance we can see in the market. Now always remember that support and resistance are not just lines, it's a zone. You can notice that I never draw a line, I always draw a zone. So you need to figure out that the support and resistance are zone, not a single line. Now let's learn how to plan your trades based on that. So let's assume price goes up and breaks the resistance zone. What 90% do? They took a trade upside, and we all know only 10% are making money in the markets and 90% are losing. Market rarely moves when 90% build their positions. Market always moves with big players. So whenever markets break a resistance, we don't take a trade upside. We just wait for a red candle, and when a good red candle forms, we take a trade downside. For more confirmation, when the price breaks resistance from upside, we can enter at this particular level. Same thing we do when market breaks support. 90% of traders are taking trade downside, but we wait for a green candle form, and whenever it's a good green candle form, we take our trade upside. Now let's come to another condition. If there is a PSY level above the resistance, then what should we do? We'll make entry after breaking the PSY levels, because market moves where stop losses are available, and there are many stop loss available in PSY levels. That's why price break PSY level, hunt the stop loss and came down. We'll wait when a good red candle form, we'll make our downside entry. Same if market breaks the support. If there is a PSY level under support, market breaks the PSY level under support, forms a good green candle, and then market go up. Same psychology, there are many stop loss available in PSY levels. Market hunt the stop loss and moves up. Before entering in the final condition, I will tell you a point that you have to put in your mind. So the point is, whenever markets go upside, markets calls you to make a trade on downside. Vice versa, whenever market wanted to go downside, he calls you to take a trade upside. Always remember that point. Now let's come to the final point. So let's come to third condition. So whenever market came down and touches a support and started time passing, 90% of the retail traders make their position upside, because they are taught that whenever market comes to support and started consolidating, they should make their position upside. Those who wait for confirmation, market forms a good big green candle and they also enter in the market. But the top 10%, the operators, don't do that. They move their position downside. So if you remember that point, I said that whenever markets go upside, market calls you to make a trade on downside. Vice versa, whenever market wanted to go downside, he calls you to take a trade on upside. So here's market wanted to calls you to take a trade on upside, but market goes downside. So what we do, after the trap green candle forms, we wait for a red candle to form, and whenever a good red candle to form, we'll make our trade downside. Same goes if market moves upside and touches resistance and started time passing, 90% of traders make their trade downside, but we wait for a good green candle to form, and whenever a good green candle form, we make our trade upside with the big players, with the operators. So these are the three conditions you can trade. You can use support resistance like institutions, like big players. So now let's take a look at chart of these examples. So let's take a look of these examples on chart. So let me find it. So here I can see a beautiful example of this pattern. So let me draw it. Let me draw it for you guys so you can find this as well. So ignore the lag. So let me draw it. Yes. So little bit down, and yes, like that. Exactly. So this is our previous day closing support, and we can clearly see market came down, and as according to our analysis, we should wait for a green candle to form, and look at this beautiful. So if we enter on this green candle, so our target is we can get a barely good target of 230 points, and it is good according in Bank Nifty. It is a really decent target to hit. So now let's have the above. It's a day high support. So also let me mark it for you guys. It's also a day high support, and same condition that I mean. Let me mark it first. So it's day high support, and you can clearly see market went up, and we should wait for a red candle to form, and when a beautiful red candle form, if we enter in that particular red candle, let me mark it first of all. Ignore the lag, please. So if you enter at let me fix it. If you enter at this particular red candle, and so our target got hit. It's a really good target to get. So this is the first example. Let me find if we can find another examples as well. So let me find it if we can get another examples as well. We have to find some of sorts of support. So let me find it, and yes, get it. So let me draw it. It's a swing support. And let me draw it. Our third condition is there, or the time passing condition is approved here. So let me draw it clearly for you. First of all, let me draw it little bit, drag that down, and yes, this is. So you can see price came down and sustaining, started time passing price here, and 90% of traders enter their trade, and those who enter wait for confirmation, market forms two good green candle, and they also entered here. But what we do, we should enter in a good red candle. We should have to enter in a good red candle. If you do that, we can make money. So we can clearly see market came down, trapped, all of the buyers came down. So if we enter at particular this particular level, we can clearly see how good our target get hit, how much money we have made. So it's a really good trade that happens, and it's on the current chart. It's not of 2 or 3 years data. It's all about the current chart. So let me find another. Can I found the PSY levels as well, PSY levels example as well. So let me find it. Yes, I find it the support, but what the hell? Yes, and yes, yeah, exactly, this is the support we want. So this support we want, and I wanted to tell you the previous day support can work as today as well. So let me drag it down. Ignore the background noise please, and the lagging because of my OBS is not supporting, as I always I previously said. So ignore please that. Let's focus on the example. So let me drag it, and yes, I drag it down, and you can beautiful see. Let me mark the PSY level as well. So 58,500 is the PSY level, and here we notice, and 1 and 2 points can be adjusted, like the mark 1 and 2 point can be adjusted. So let me mark it. 502 is can be work. Let fix it. It can be work as a PSY level. 1 and 2 can adjust. So let's see, market breaks down the support, and according to our analysis, you should enter in a green candle after the breaking of PSY level. So market breaks that PSY level, and there's a beautiful candle form. And if we entered in that green candle, it's exactly, let me mark it so if you can understand well. If we enter at the rate this particular green candle, so let me see how beautifully our targets get hit, how beautifully we make money. So we can clearly see these examples effects. If this video helped you to understand support and resistance, make sure you like this video and subscribe my channel for more advanced trading concept like this. Now you know how the big players use support and resistance, but it is completely useless if you don't know how to manage your risks. So watch this video to understand this concept. And with that being said, I will see you in the next one. Till then, stay tuned.